We changed the schedule a little bit, so our next speaker is Dr. IYABO Olanrele from NISER, which is the Nigerian Institute of Social and Economic Research, I think. So she's going to go next.
Okay, so good afternoon, everyone. Good morning, wherever you are from. I'm here from Nigeria. It's afternoon with us here in Nigeria. So thank you for having me on this forum. I will be speaking this afternoon on financial inclusion, on fintech services and financial inclusion in Nigeria. So I will run through the overview of my presentation, which will focus on the overview of the financial inclusion strategies that we have here in Nigeria and the current status of financial inclusion in Nigeria, and also fintech services in terms of access and use for livelihood strategies and the challenges and risks that are associated with fintech services diffusion in Nigeria, and also policy options that could be leveraged to scale fintech services towards improving financial inclusion in Nigeria. So for us, in terms of concept definition, basically financial inclusion relates to adults of 18 years and above, which have used financial products or services either through formal or informal channels, such as from formal channels like financial institutions and other non-financial institutions. And we also have the informal channels also that also provide means for financial inclusion, such as thrift associations. And we have also adults that are not using any financial product or services. These are the ones that are tagged as being formally, that have been financially excluded. So among the formally served adults, in terms of financial inclusion, those that are banked, we have the banked one. These are individuals that have or use financial products or services provided by commercial or non-interest bank regulated by the Central Bank of Nigeria. And then we also have those that are served by other forms of financial institutions, that is those that use financial products or services provided by microfinance institution, payment service bank, or other regulated bank financial institutions, as the case may be. So in terms of strategies that we put in place for financial inclusion in Nigeria, we have a number of them, but there is a specific policy which serves as the umbrella policy for financial inclusion strategy in Nigeria. And the most recent one is the revised National Financial Inclusion Strategy, which came into being in November 2022. And this very particular policy actually seeks to provide financial inclusion across various areas of financial services, such as credit provision, savings, pensions, and so on and so forth. Its targets basically, it has a focus also to ensure that youth and women, that is those that are usually marginalized from accessing financial services, are actually served with various formal financial services in Nigeria. And also it targets providing financial services for small and medium scale enterprises that are usually constrained from accessing credit and other financial products that could catalyze their business activities. We also have other strategies also that we launched through directly or indirectly to ensure financial inclusion in Nigeria. And one of them is the eNaira CBN digital currency that was launched in 2021. And this digital platform operates like a kind of a blockchain technology. But basically, it's the digital form of a national currency, and it draws its value from the physical value of the naira. So what this also does is that it provides a kind of a platform for creating financial inclusion. And Nigeria is the first African country that has actually launched this eNaira digital currency platform, and among other 5 countries also in the world. But then what in terms of financial inclusion, this very particular strategy seems to extend beyond just having digital, seems to extend beyond urban areas to ensure that in the future, even those in rural areas could access this very particular innovative platform to ensure financial inclusion. And we also have the Naira redesign cashless policy that was initiated also in 2022 December stroke January 2023. Although this very particular policy was actually tailored towards redesigning some of the denominations in Nigeria, about 3 different denominations. However, it's created a kind of a platform, indirect platform for financial inclusion, because at the time when this policy was introduced, there was a kind of cash scarcity in Nigeria. And this actually leads so many, even those that were unbanked, to embrace digital services like mobile money transactions and other digital means of transaction. And we also have the regulatory and supervisory framework for mobile money services, payment service banks, regulatory sandbox operations, and agent banking. All these were actually initiated by the central bank to ensure that there is a stringent regulatory framework for fintech services. Basically, Nigeria happens to be one of the countries having a strong financial regulatory framework for fintech services, which also accounts for the speed of fintech diffusion in Nigeria. So having talked about some of these policies and strategies, what then is the status of financial inclusion in Nigeria in terms of gender, location, education, and income? Why do I actually identify these very indicators? This relates to my own field, and this relates to my policy space, which actually is tailored towards socio-economic development. So to start with, I will talk about the various the targets that were set in the 2022 National Financial Inclusion Strategy. The targets that was set in that revised policy framework that I discussed earlier actually has a target of 75 of Nigeria reaching 75% financial inclusion by 2024. So where are we in terms of financial inclusion as reported by IFIN-A statistics in 2023? As at 2023, Nigeria is 1 point away from achieving the 2022 National Financial Inclusion Strategy that was recommended by that very particular policy. Though we are close to meeting our targets, but it's important to understand that we have not actually reached points where we can call it a universal point, a point of universal financial inclusion in Nigeria. Also, like I did mention earlier, there are other areas of financial inclusion that were set in the 2024 National Financial Inclusion Strategy, like payment, savings, credit, insurance, pension, and the rest. All these targets, we are on the way to meeting these targets, as shown by this variance, the last column here. It's showing the variance in the negative, but based on where we are, based on the data provided in 2023, we are very close to achieving some of the targets set by this very particular policy. But like I did say, we are still a little bit far away from reaching a point of universal financial inclusion in Nigeria. So coming to those initial indicators that I highlighted, socioeconomic indicators that relates to individual socioeconomic characteristics in terms of financial inclusion, the IFIN-A's 2023 statistics also shows that by gender, men are more financially included. 79% of men are financially included compared to 70% of women. So this by itself indicates that there are gender gaps in financial inclusion in Nigeria. And this could be easily explained, possibly due to difference in socioeconomic characteristics in terms of income gap and in terms of opportunities that exist across gender, and also in terms of cultural and also religious barriers that could actually constrain women from embracing economic opportunities compared to men. So in terms of location also, the statistics shows that 53% of those in the urban area are financially included compared to 58%. So the reasons are not far-fetched. One is the fact that rural areas are not actually advantaged in terms of infrastructural facilities. And also, aside from the issue of infrastructural facilities, also awareness could also serve as one of the barriers limiting rural areas from being financially included compared to those that are in urban areas that are advantaged in so many fronts, both technology, infrastructure, and all other indicators that could serve as levers for them being financially included compared to those in the rural areas. Also, by income quintile, 60% of those in the richest income quintile are 88% of those in the 60% income quintile are actually financially included compared to 40% compared to 56% of those within the 40% income group. So this shows that income itself, economic status of individual has a direct impact with such individual being financially included or not. So an individual that is more economically advantaged has higher likelihood of being financially included. And by education also, the statistics shows that those that are highly educated are also more financially included. Specifically, 64% of those that have secondary education in Nigeria above are financially included, compared to 40% of those that have secondary education and that are below secondary education level. So this implies that increased awareness, knowledge gap are factors that will actually contribute to the level or status of individual financial inclusion. So what are the financial fintech services that exist and their status in terms of access and use in Nigeria? We have, specifically, I'll be speaking about mobile financial services, which relates to payments platforms that exist in Nigeria through mobile money means, and then the digital financial services also, which relates to online services, online digital banking that exist in Nigeria and their status in terms of access and use for livelihood strategies. So the data here shows that fintech is actually catalyzing growth in financial inclusion in Nigeria. And by this, what it means is that fintech is one of the major drivers of financial inclusion in recent times in Nigeria. So, and we'll demonstrate this with the data provided by the World Bank Global Findex. The most recent one is the one produced in 2021. And it shows that the mobile money, individuals with mobile money accounts grew from 2% in 2014 to 9% in 2021. So this in a way may look small, but it's actually significant comparing the gap between 2014 and 2021. And these are part of the major drivers of financial inclusion in Nigeria. While the national strategy was not broadly focused on enabling fintech services, but it has also provision to ensure that financial inclusion are enabled through fintech services, because it understands the rate and the importance to which fintech services could catalyze growth for underserved and those that are marginalized in terms of financial inclusion. So by gender also, the data shows that female also, there is increase in terms of female that have embraced fintech services such as mobile money accounts. It increased, the number of female increased from 2%, the proportion to 5% in 2021. And also the male proportion also increased from 3% to 12%. This also, although there is growth, but it also indicates some gender gap in fintech service adoption. Also by education also, we realize that there is also gap based on those that have higher level of education and those that have lower level of education. But in general, there's an improvement especially among those that have higher level of education in terms of embracing fintech services such as mobile money accounts. So this tells us the role education can play in terms of digital financial technology adoption. And also by economic status also, the data shows that those that are among the richest, actually the proportion of those among the richest that embrace, that have mobile money accounts increased from 3% to 12%. So this is quite significant compared to those that are among the poorest 40%. And by location, unfortunately, there was no data for 2014, but we could see that those in the urban area for 2021 data were actually at the higher rank of embracing mobile money services. And also for labor market participation, the data shows that those that are in the labor market, that is those that are not encouraged and that are not discouraged, they could either be in work or they are still searching for job, but still within the labor market. The number of them, the proportion of them increased from 2% to 10% in between 2014 and 2021, compared to those that are out of labor force. These are categories of people that are discouraged or are not willing to seek for job anymore due to one situation or the other. So how about online banking? That is the digital banking. One thing that was striking here was that while individuals will embracing mobile money accounts are increasing across various socioeconomic characteristics, for digital banking, it was so surprising that the numbers were declining. So, and we could see declining trend across, even from total, it declined. The proportion of those on digital banking platform actually decreased from 37% to 34% between 2014 and 2021. So this could be this indicates some maybe some lack of trust or some other issues that could actually be driving this very particular trend that is being observed here. And across various individual characteristics, also by gender, we saw decline by education, by income group, and also by labor market participation. So across all dimensions, there was a decline in terms of digital banking between 2014 and 2021. So what this could imply is that one of the reasons that we have accounted for the difference between those using mobile money accounts and digital platform could be because digital platforms are basically online and they require internet connectivity, while mobile money accounts, for some of the services, even if you don't have smartphones or you are not quite online, you can actually access and you can use some of the mobile money provision services. So how does fintech services and livelihood relate? So I analyzed the data also provided by the same data provided by the World Bank Global Fintechs, and it shows that fintech services is actually translating financial inclusion growth into broader livelihood strategies, particularly for those using mobile money accounts. So what this shows is that 32.5% of those using mobile money accounts have actually adopted fintech services. They have used it to save money, to start business, operate, or to expand a farm or non-farm business. So implying that it is increasing self-employment, it is increasing entrepreneurship intention. It is also increasing, helping to expand existing businesses, which in a way have a multiplier effect on general unemployment rate in Nigeria. So this is one of the direct effects of fintech services. But for digital services, although there were also gains, but this was far lesser than what was realized from mobile money banking. So these are some of the situations, and in this regard, so what are the risks and challenges actually associated with fintech services in Nigeria? while they continue to drive growth in financial inclusion, a number of risks in terms of infrastructure, regulation, trust, and socioeconomic exist, which are actually needed to be mitigated in order to enhance their full benefit in driving financial inclusion in Nigeria. So the first one relates to regulation. So currently, there is no unified and comprehensive legislation in Nigeria that regulates fintech industry. There are several complexities and ambiguities that often occur with respect to compliance-related issues. So this, in a way, stifles innovation and it fosters growth and development within the industry, where you have multiple regulations, where you have multiple strategies coming up at the same time. It becomes difficult to actually innovate, and it discourages new entrants, and even for existing fintech businesses in the fintech ecosystems, it creates some kind of ambiguities and some kind of uncertainty about government's direction about fintech services in Nigeria. So the second one has to do with issue of existence of multiple regulators. As we have it currently, the central bank ordinarily is expected to serve as the overarching institution that guides the activities of financial inclusion in Nigeria, and it's actually doing so. But for fintech services, being that it's an emerging innovation, there are several actors within the ecosystem that oversees the activities of the fintech industries. And a good example we have, amongst them, we have the National Information and Technology Development Agency, NITDA, which regulates issues that has to do with technology and other related issues. And we have also the Federal Competition and Consumer Protection Commission also, which takes care of the end users, the concerns of the end users in terms of breach of contract or services. And we have the Security and Exchange Commission also, who is also an active player within the financial industry in Nigeria. And we also have the Nigerian Deposit Insurance Corporation, which also oversees other related activities of the financial sector in Nigeria. So these multiple actors tends to play several roles in terms of regulating the activities of the fintech industry, but at some point there seems to be overlap and some kind of lack of synergy between what occurs and types of regulations that have been set for this for the fintech industry. So this makes it leads to kind of cumbersome regulatory requirements, making it challenging for the fintech service. Fintech industry to provide services in a manner that is anticipated. There are issues also relating to cross-border operations of fintech providers. Most fintech activities cut across several borders, as you know. Some of them some are just payment platforms, while some are loan providing platforms, that's credit providing platforms. Some of them are into pension services, and some of them have multiple services that they provide. So there is tax. These kind of cross-border operations of the fintech service providers create some kind of hurdle. So it comes with responsibility. It provides some kind of hurdles for legal and regulatory framework, as the case may be. So, and another risk and challenge relates to the issue of trust. You know, in most quarters, most Nigerians, especially those that are not actually aware of how the fintech service operates, link the fintech industry to some sort of Ponzi schemes, and this raises concerns around operational security. And it also, with the increase also within hacking and cyber threats in the Nigerian financial ecosystem, and also regulatory complexities, customers usually lack confidence, lack trust in fintech industries. For instance, the Financial Institution Training Center, one of their reports, the most recent one for Q2 2023, ranked web and mobile banking as the second and third in terms of those facing high cases of fraud in the financial sector. So with this kind of records and with this kind of experiences, customers' trust are dampening in adopting fintech services. So the next also has to do with the issue of infrastructure. While Fintech Services seems to be catalyzing blustering growth and financial inclusion, especially for those in the rural areas, there are challenges relating to infrastructural gaps. And a good example in this case is the issue of electricity infrastructure in Nigeria, which has been a daunting challenge for us. And this has also inhibited optimum level of electricity supply. The recent data provided by the Nigerian Regulatory Electricity Commission shows that average grid electricity generation in Nigeria for 2022 the 2024 Q2 was around 4,000 megawatts. And I must tell you that this has always been the benchmark. We have not really done much when it comes to the megawatts, the quantity of electricity supply in Nigeria. Nigeria has always hovered around this very particular figure, either 4,000 and 5,000. That is what we've been doing for over 200 million plus population in Nigeria. So this tells you one of the challenges we are having with electricity. And aside that, we have this. In most cases, electricity is not the supply is unreliable. We have high incidences of grid collapse, leading to total or partial blackouts, as the case may be. So this situation, in a way, limits the extent to which fintech services could diffuse, especially at the rural level. So also we have issues related to internet connectivity. The most recent data shows that in 2022, 35.5% of the population uses internet, implying that there is low internet penetration in the country. So these are some of the infrastructural challenges that could limit fintech service diffusion. And also we have issues that relate to socioeconomic the socioeconomic status of the individuals. The most recent data produced by the National Bureau of Statistics shows that that's the reports that accounted for multidimensional poor individuals in Nigeria, shows that 63% of Nigerians, which translates to 133 million, are multidimensionally poor. And these numbers, they face various types of deprivation, including access to electricity, access to education, and so on and so forth. And we also have issues relating to inflation rate, which has been on the rise in recent times due to changes in the policy landscape. And this, in a way, has also depressed the purchasing powers of individuals, plunging more individuals into poverty, as the case may be. So with declining economic status, with worsening economic status, it may become increasingly difficult for individuals to embrace fintech services. Like I showed in one of the slides, individuals on a high income level are more advantaged. They have higher benefits and they embrace, they are more financially included compared to those that are poor. So if this situation persists, the Nigerian financial inclusion strategy actually may experience some setback because of lack of individual capabilities to embrace various financial services. So what are the policy options that I put forward that will actually help going forward? One is that the policy should focus on deepening the quality and impact of financial inclusion. At present, most policies aimed at supporting financial inclusion, including fintech adoption, basically focus on expansion in account ownership. So policies should support depth and quality of financial services. Most individuals, yes, have various types of accounts, which has translated to Nigeria getting close to its set financial inclusion targets based on the most recent strategy that was set in 2022. But the depth and quality of financial inclusion needs to be enhanced for existing account holders and even new entrants for greater impact than those simply seeking to increase the number of financially included. Because when the depth and the quality is improved, it has higher benefits for individual growth, for micro-scale growth, and even for aggregate economic growth. So also policy should address both demand side and supply side constraints, removing governance barriers to financial inclusion alone without addressing other supply side constraints, which could come as indirect constraints like infrastructural constraints like the ones I mentioned before, issue of electricity and internet connectivity. And then merging it with the demand side factor, without merging it with the demand side factors could actually slow financial inclusion. But when there is a match between the demand side constraints and trying to, policies or strategies that remove barriers between the demand and supply side constraint, the overall effect becomes positive. So also policies that support improved livelihood strategies also benefits financial inclusion, the financial inclusion drive in the country. So these policies that encourage moderate barriers to income generating activities could have multiplier effects because they can also lead to significant increase in financial inclusion. So when government is intentional about improving individual means of livelihood, thereby increasing income threshold, this will have an impact on the level of financial inclusion. And we know that the overall benefit goes beyond just individual benefit. It has also benefit for economic transformation. It has benefit for economic diversification. It has benefit for economic competition, so economic competitiveness, and so on and so forth. So I think this is where I will stop. Thank you.
Yeah, thank you. I think it was a really interesting talk with lots of great statistics. And yeah, there's a few questions that we can ask real quick. Why is online banking declining? Are banks de-risking the people or are people avoiding the banks?
Well, just like I said, I think one of the issues, the digital banking relates to online banking basically. So, and there are several things involved. The issue of infrastructure is there. So individuals have the capability to afford internet, that's data. And then individuals also having capacity to afford smartphones or devices that will actually enable them use digital banking. There are issues around that. And then there are issues also around data security and cyber threat. And I show some statistics in that regard. So this, in my opinion, could be part of the reasons why digital banking seems to be declining. Because mobile banking, individuals seems to relate with mobile banking operators far than that of digital banking. So, and also in rural locations also, you could see that there seems to be a kind of gap between urban and rural locations. So to me, I think mobile banking seems to be mostly adopted in rural location where we have high level of financial exclusion.
And I guess the rest of the people are using cash, or is it some kind of telco money?
Definitely Nigeria is still a cash-based society, largely cash-based society.
You said people have a lack of trust in fintechs. Is
Definitely.
that like what's the cause of that? Because actually in like I would say in Europe or US, Japan, people are, I would say, more excited to use new payment apps.
Yes, yes. It's because of some, I spoke about issues of lack of clear regulation. It's only in recent time that we see a number of regulations being strengthened towards protecting individual accounts and interests in the fintech services. So at the initial advent of fintech services in Nigeria, there is this issue, there is phobia around fintech services, being related to Ponzi schemes. And we've had several fintech companies that are not really regulated, that actually, they actually eloped the close-up firms, the close-up shops, such that at the end of the day, individuals could not actually retrieve their funds. So these are some of the situations. And when you have issue of literacy, high literacy, illiteracy gap also, it could serve also as a challenge. Sometimes most of these people are not really aware about the benefits and they are not aware how this thing works. So I think to some extent, lack of awareness and information. But as it is, I think things are changing fast. So people are embracing fintech services with recent policy changes, although some of them are not directly pronounced, but things are really changing fast. And I think the issue of trust is gradually being addressed within the ecosystem.
That's good to hear. Do you have any statistics about cryptocurrency use? I think it's well known that many people in Nigeria are at least trading cryptocurrencies as an investment, but do you have any formal stats?
Yes, I know that is ongoing in Nigeria, but currently I don't have that, but it's something that I know it's available somewhere.
I think it's not regulated, right?
It is not really regulated. We keep having some kind of regulatory jumps here and there. At some point, you hear there is regulation, and at some point, the central bank will come out and say, no, they are going after this, they are trying to. So, the issue of regulatory ambiguity is there. So you don't even know what is what.
Yeah, that seems like a problem. But I think it goes along with the theme of your talk and the policy recommendations that there needs to be a better regulatory framework. And I think that just comes with time. Also, because the central bank was also trying to issue their own digital currency.
Yes, that's in error, yes, yeah, of course.
Makes things a bit complicated.
Definitely.
Yeah, I don't see any further questions, and I think you have to go. So I think...
Thank you.
No, thank you. I think it's a really great talk. It's very interesting to go into the details of some of the statistics in the economy. So thanks a lot for your insights.
An ancient prophecy foretold an eclipse that would open a portal to a mystical world, the world of Soratopia, where honor, valor, and swords determine your fate. You can become one of them. Choose your path. Become a true samurai. Explore the vast world of Soratopia. Defeat mighty bosses in various locations. Your sword is your strength and honor. Don't worry, you're not alone. In Soratopia, you'll find loyal waifus to relax with. Engage in the game, pray, complete quests, and accumulate points to become eligible for a massive airdrop. Your path determines your destiny. Choose wisely. The eclipse has awakened, and so have you.